Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good evening. Ira Epstein of Linn & Associates with your financial market update for this Monday. This is Eclipse Day, Solar Eclipse Day, and the 21st of August, 2017, just after 4 p.m. Central Daylight Time. So we have a very mixed stock market today. We were down in the Russell, down in the NASDAQ, up a fraction in the Dow, and up a point or so in the S&P. Certainly not an awful lot going on. We've seen the VIX slide back. In addition, down in the gasoline. Now, the market is starting to get worried already that this driving season is over, past tense, over. The big demand's out of the way, and you're starting to see your slip in the crude and the gasoline. So be ready for that. It is the 21st of August. A lot of people have taken their kids back to college already, or the kids are on their way. Chicago schools will begin in a few weeks. Families are wrapping up vacations right now, and come that first week of September, we're all going to be thinking fall, and that driving season goes to the wayside. In the grain markets, the crop tours are taking place right now, so you've got to pay attention to them to see which regions of the country are getting more yield, less yield. Everybody's going to be guessing about that. Metal markets today, a good up day, if you will, for the gold, but a terrible performance on Friday when I wasn't here. Market gets up in the D's gold into the 1306 area, closes lower on the day from there. Now, that wasn't pretty. But let's go to the NASDAQ, because this seems to be the market that's sort of just meandering around. Earnings season out of the way. Now we'll start talking about the next Apple phone, right? All those things are going to happen. So the market's gone from 56, 52, 75, 300 points roughly higher to 59, 58, 50, and is now slipping back almost, 140 points or so from that point. And that's obviously on a closing basis, not high to low. When we take a look at a daily area chart, we've come down. You finished today at 57.94. That's an improvement, because this morning when I was doing this, that was around the 57.52 area. So you've come back a little, but you still, if you look at 57.89.75, you've taken that low out. So you've still got the pattern of the lower lows and lower highs just on a closing basis. You can see how the market has come down to this old area that it bounced from, and it tried to put on a bounce today. Maybe you'll get one tomorrow, but don't have anything going. The president speaks tonight about Afghanistan, and you know our president, he's always off script, so who knows if he's going to say anything about infrastructure, taxes, how he's doing. I don't know. But we'll see if anything goes with there. Typically on these type of speeches at night, he doesn't take questions, so he most likely will stay on script, we hope. If we take a look at the swing line study, we have lower highs and certainly lower lows. That is bearish. The market is trading under the 18-day average of closes. That gives it a bearish bias with potential support at the 100-day moving average of closes at 57.1250. The Bollinger Band, you hit 3 times already, and the market is fighting against it, as you can see. You rarely stay over it. You can go back here and take a look, or under it. So this is a support zone, resistance back at the 18-day average, and momentum is oversold. So I can understand some profit taking here looking at where the Bollinger Bands are. But other than the market being oversold, there's nothing bullish about this market. When you come to the S&P, it's sort of the same story. Lower highs, lower lows. So the swing line is bearish. The market got down 3 days in a row to the lower Bollinger Band, made a stab today for the 100-day average, couldn't quite get to it, came back and closed over the the lower Bollinger Band. That's good. That means the market's staying what I'll call in balance. Remember, you only stay above, up here, or below. This is really the area I should point. Above or below a Bollinger Band 5% of the time. So to see the market bounce away from it, yeah, that makes all the sense in the world. Same thing in the September Dow. Oversold, not a trend here though. You got a higher high and a lower low. Got down finally to the lower Bollinger Band in a bounce. But there's nothing bullish on any of these stock indices. And making matters worse, the Russell's getting even more bearish. It has the lower highs, lower lows, a bearish crossover where the 18-day average got under the 100. And if we count how many days under 20, today's day 1, Friday, and if you go to the other day, there you are on Thursday. You have an embedded reading, which means on bounces, I expect the trend is going to be what? Down and sold rather aggressively is my guess. When we come to the VIX got to the upper Bollinger Band again and failed. Now, we had 2 days over it. You know, when this was going on, news media was full of, oh, is this it? Is this where the market finally breaks out? And I went on and said, no, it's not where the market breaks out. Markets often fail from there. It's what happened. You went back here. But there is a but. You've had, since I left, a bullish crossover where the 18-day average got over the 100. Is it meaningful? Don't know yet. But what does it do? It puts this market in an uptrend. You have higher lows, higher highs, bullish crossover, momentum that is fading but not turning down. Interesting. Nothing bearish on that chart. TLT. Obviously, a lot of you like the bonds and the notes, so you play this ETF. And as you can see, you got the higher lows, higher highs. Market went to the upper Bollinger Band Friday, backing off, trying to lock in a bullish trend with the market embedding. The interesting part of this is how it's looking going into the Jackson Hole meeting. The higher this goes, lower interest rates. Yeah, lower, not higher interest rates. So let's go to the bonds. Knocking on the door of the upper Bollinger Band. With the move late in the day, I think the trend has turned up, but right into the upper Bollinger Band in an overbought condition. The 10-year notes has a pattern of higher lows, higher highs. It is very overbought into the upper Bollinger Band, big resistance there. In the dollar index, lower highs, lower lows, which goes hand in hand with lower interest rates. And if this market can break out, maybe it gets to the lower Bollinger Band. Momentum is down, bias is down, trend is down in the dollar. Flip-flop into the euro. You've got, in the euro currency, higher lows, higher highs. It's an exact mirror, the other image. Looking for 118.96. That's a pretty big number. That'd be 119. Wow. And remember, Mario Draghi speaks this week. As the market's set up to disappoint, it could be. You never know when anything's going to happen at Jackson Hole, and that's a big meeting coming up. Then we get to the Aussie dollar, which actually threw out buy signals today in terms of chart action, in terms of higher lows, higher highs, bullish. The market's over the 18-day average of close, bullish. Momentum pointing up, bullish. So everything on the chart action is bullish. That gets negated if you get under 78.60 and a fraction. Let's see what that exact low is. It was 78.66. And if the market can extend to the upside, well, possibly it can make a run to the upper Bollinger Band. But the trend did turn up in this market. The Japanese trend has been up, past tense. It is overbought. It's got higher lows, higher highs going into the Jackson Hole meeting. Safe haven type currency. I'm wondering what this market is seeing because of how high it is right now, which is interesting. Then we get to the crude, and you can see where the failure happened against the 118-day moving averages, that combination. So you came from the lower Bollinger Band when I was out of town. You had a big rally on Friday. Went up again today, and if you look at today's high of 48.91, it is one tick higher than you were on Friday. Friday's low, 46.93. You didn't take that out, but right under you is the lower Bollinger Band. That's where I'm looking for support. And the gasoline market had a nice rally on Friday, only to give the whole thing up today, plus that. So I'm looking at this market as void of trend. We then get to the nat gas market, which is trying to say, I want to go higher. If today's low is taken out, it would be a bull trap. What do I mean? You have an outside day up. If the market can extend, the upper Bollinger Band is a potential target. Supports the 18-day average, but if you take out today's low, then you get a trap and you might head back down to 274. I can't answer why this market took off. I'm not seeing any really hot weather across the country or any increased demand that should come one way or the other. But heck, I don't know everything that's going on anyways. I want to talk to you about our chart of the day, and you should listen. This is going to become a subscription service in September. We've offered it for free, given it for free for a year and a half. It's really popular. And if traders want it, well, obviously we'll try to give you a free trial to it, but it is going to become a paid subscription, and we're adding to it. We're now saying that when a first price count comes out, some of my brokers are now writing option ideas on how to get to that count with strategies using the options market. To find out more about all this, it's really simple. You can either give us a call, 866-973-2077. We will send you 2 PDFs that explain how to work it. One that will teach you, in fact, we have videos that show you how to create it on the charts yourself and where you go with it. Obviously, the charting software is only available on our charting platforms, all right? We don't make it available on other platforms. If you want to see, once a trend kicks in, where might that trend head? What are the different levels of support and resistance an up or down trend may have? One of the tools that we use for it. And I think that once you take a look at it and you get a small hang of it, you're going to go, whoa, this does fit in with what I need. Give us a call. Go to our website. It's still a free trial at this point. You can click up here if you're watching me on YouTube, or underneath us on many websites. It says, click here for Ira's free offers. I'm Ira Epstein. Thanks for watching, and I'll see you all tomorrow.